Good morning or good afternoon, depending on when you're listening. My name is Matt Philby. I'm an attorney with Pearson Patterson, LLP, in our Arlington, Texas office, and I'm here today to talk to you a little bit about the upcoming Texas home equity constitutional amendments that were voted on in November and will take effect on January 1st, 2018. First, we'll start with a little bit of background of how these amendments came about. The Texas legislature, which was in session in 2017, passed Senate Joint Resolution 60, which we refer to as SJR 60, on May 9th, 2017. The proposed amendments were to the Texas Constitution, Article 16, Section 50A6, 50F, 50G, and 50T, governing home equity lending in the state of Texas. Because it was a constitutional amendment, rather than being signed by the governor, the SJR 60, once passed, was submitted to the voters of Texas in the November 7th, 2017 election, and it was approved by the voters. Therefore, the amendments will take effect on January the 1st, 2018. The first big change that these home equity amendments make are to the current rule for home equity loans regarding agricultural exempt property. Currently, Texas Constitution Article 16, Section 50A6I prohibits a home equity loan from being secured by property that has an agricultural tax exemption. There is one minor exception to that rule for a milk-producing property, but generally speaking, ag-exempt properties are not eligible to serve as collateral for a home equity loan in Texas. However, as of January 1st, SJR 60 repeals Article 16, Section 50A6I, and will allow for a home equity loan to be secured by a homestead property that has an agricultural tax exemption. Now, an agricultural tax exemption under the Texas Tax Code falls within a category of exemptions known as open space tax exemptions. Open space tax exemptions include agriculture, timber, wildlife, and so once SJR 60 takes effect on January 1st, homestead properties that have a wildlife, timber, or agricultural exemption should all be allowable collateral for a Texas home equity loan. This obviously eliminates a major risk of home equity lending that has been the cause of litigation in the past, and at least one prominent case resulted in lien being declared invalid. The next big change that these amendments make are to the fee cap. Most of you are probably aware that under Article 16, Section 50A6E, there is currently a 3% fee cap excluding interest on a home equity loan. The 3% fee cap includes most fees that are paid in connection with the loan and certainly all fees that are paid to the creditor. However, SJR 60 amends Section 50A6E to reduce the home equity fee cap to 2% of the loan amount. But there is a big caveat to that. Even though the fee cap is being lowered, the following fees will be excluded from the cap. Number one, an appraisal performed by a third-party appraiser, a property survey performed by a state-registered or licensed surveyor, the state base premium for a mortgage title policy with endorsements, or if no mortgagee title policy is issued, the price for a title examination report if that price is less than the state base premium for a mortgagee title policy without endorsements. There are a few ambiguities with regard to these exemptions that we will talk about later and that we, in many cases, will be addressed by the interpretations of the new home equity rules that will be issued by the Texas Finance Commission and the Texas Credit Union Commission, probably in the February or March timeframe. The next big change that SJR 60 makes is to eliminate the once a home equity, always a home equity rule. Currently, Texas Constitution Article 16, Section 50F requires the refinance of a home equity lien to be either another home equity lien or a reverse mortgage. This is the once a home equity, always a home equity rule. However, SJR 60 will amend Section 50F of the Constitution to allow for another alternative. While you will still be able to refinance a 50A6 home equity loan with another home equity loan or with a reverse mortgage, you will also now be allowed to refinance a home equity loan with a rate term refinance under Texas Constitution Article 16, Section 50A4, but the rate term refinance will have to meet certain conditions. These conditions include, number one, the refinance may not be closed before the first anniversary of the date the home equity loan was closed. So just like with today's rule, where you cannot refinance a home equity with another home equity for at least 1 year, the same rule will apply to a rate term refinance of a home equity loan after January 1st. Number two, no additional funds may be advanced as part of the refinance loan other than funds that are advanced to either refinance a debt under Section 50A1 through A7 of the Constitution, or actual costs and reserves required by the lender to refinance the debt. Now, Sections 50A1 through A7 of the Constitution set forth the allowable liens against the homestead. These include liens such as a purchase money lien, a tax lien, an ulti of partition, a refinance lien, a mechanics lien, a home equity lien, or a reverse mortgage. What this provision says is that you can use the proceeds of a rate term refi of a home equity to refinance any of those types of debts that are allowable debts under the Constitution. So, for example, if you have a property with a first lien purchase money mortgage and a second lien home equity, and the borrower wants to refinance those both into one new lien, you will still now be able to do that with a rate term refinance as long as the refinance meets all of the requirements of Section 50F2 of the Constitution. Number three, the principal amount of the refinance, when added to the aggregate total of the outstanding principal balances of all other valid liens against the homestead, may not exceed 80% of the homestead's fair market value on the date of refinance. This is exactly like the current rule we have with home equity loans, where the CLTV, all debts secured by the property, combined loan to value, cannot exceed 80% of the property's fair market value on the date you originate the home equity loan. The same rule will apply for a rate term refinance of a home equity loan after January 1st. And finally, the rate term refinance of a home equity loan will include a 12-day notice requirement, similar to the 12-day notice requirement we have for home equity loans, but with a couple of important distinctions. Number one, the 12-day notice form for a rate term refinance of a home equity loan is a different form than the one used for home equity loans. It is also spelled out verbatim in the Texas Constitution in Article 16, Section 50F2. And that form, and not the 50A6 12-day notice, is the one you must use if you want to do a rate term refinance of a home equity loan. The second important distinction is that for a rate term refinance of a home equity loan, there's an additional requirement that the 12-day notice must be provided to the homestead owner within 3 business days of application. That 3 business days within application rule does not apply to a 12-day notice for a home equity loan. So, for example, I could take an application for a 50A6 home equity loan today, wait 2 weeks, provide the 12-day notice for the home equity loan in 2 weeks, and then wait an additional 12 days and close the loan. That's perfectly fine. With a rate term refinance of a home equity loan, however, that 12-day notice will have to be received by the borrower or provided to the borrower within 3 business days of application. And the key word there is provided, which we're going to talk about in a little bit as well. Because provided, in the case of the 12-day notice for a rate term refinance, does not mean the same thing as it does, like with, for example, with the LE, which must be delivered or placed in the mail, to use Reg Z parlance, within 3 business days. In the case of the rate term 12-day notice, provided actually means that the borrower must receive it within 3 business days of the application. Now, a rate term refinance of a Texas home equity lien after January 1st that meets all of these conditions is deemed under the Constitution to be a valid refinance lien under Section 50A4 of the Constitution. The other side of that coin is that a rate term refinance of a Texas home equity loan that does not meet all of those conditions will not be considered to be a valid 50A4 refinance lien under the Constitution. So it is critically important that lenders who want to do a rate term refinance of a home equity loan comply with each and every one of these delineated requirements in order to ensure a valid lien. The amendments include an additional provision in the Constitution, Section 50F-1, which will allow for an affidavit to be executed by the homestead owner or the owner's spouse at closing, acknowledging that the above conditions were met. Under the language of the Constitution, such an affidavit will conclusively establish or conclusively establishes that the loan is a valid 50A4 refinance under the Texas Constitution. So we believe that this affidavit will become a very important document on any rate term refinance of a home equity loan. And if you're doing a rate term refinance, you want to make sure that your loan document package includes an affidavit like this to help protect you and, to use the terms of the Constitution, conclusively establish that the loan is a valid 50A4 refinance. Now, the amendments make some additional changes, including one important change to HELOCs. Now, a HELOC in Texas is a 50A6 home equity lien, but it's also subject to a slightly different provision, which is 50T of the Constitution, which sets out the definition of what is a valid HELOC. Once you have a HELOC that meets all of the requirements of Section 50T, then it is deemed to be a 50A6 transaction, or valid 50A6 lien. Now, a HELOC is slightly different than a closed-end home equity loan in that there are actually two different LTV requirements that currently apply to a HELOC. Number one, just like with any other home equity loan, this maximum CLTV at the time the HELOC is established may not exceed 80% of the fair market value of the homestead property. But in addition, when you're talking about subsequent advances under the HELOC or additional advances, no additional advances are permitted if the LTV of the HELOC exceeds 50% of the fair market value of the homestead property. SJR 60 eliminates the 50% LTV requirement that prevents additional advances under the HELOC if the principal amount outstanding under the HELOC exceeds 50% of the fair market value. The 80% CLTV cap will still remain in place. So for all intents and purposes, you will now be allowed to make additional advances under a HELOC up to 80% of the fair market value of the property. There are a few other technical changes that SJR 60 makes to the Constitution, including clarifications about the people who are authorized to make home equity loans in Texas, to include subsidiaries of enumerated banks, savings and loans associations, savings banks, and credit unions. And also, the amendments remove the word broker and add banker or mortgage company to clarify that licensed mortgage bankers in Texas may originate home equity loans. Now, because of the underlying changes to the Constitution, there will be important changes to the 50A6 home equity 12-day notice. A new amended 12-day notice will take effect on January 1st. And as I'll speak to in just a minute, it's very important for lenders to keep track of when they can use the old 12-day notice and when they can use the new 12-day notice, and equally important, when they cannot use the old notice or cannot use the new notice. And we will talk about that in just a minute. As I discussed earlier, Section 50F also creates a new 12-day notice that must be provided in connection with a rate term refinance of a home equity loan within 3 business days of— and then finally, and this is a technical change, The amendments codify the Texas Supreme Court's opinion in the Finance Commission of Texas versus Norwood case that bona fide discount points, which are actually used to buy down the interest rate, are not considered fees for purposes of the new 2% fee cap. Now, those are the changes that SJR 60 is making to the Constitution effective January 1st. What I'd like to discuss now are a few important implementation issues that we see that lenders should be aware of as we head into the last couple of weeks of December and the first couple of weeks of January. Number one is, as I discussed earlier, questions about the fee exemptions. There are some ambiguities, like, for example, when a third-party appraisal can be exempted from the 2% fee calculation, what exactly is a third-party appraisal? Does that mean affiliates of the lender are exempt? Is only the appraisal fee itself exempt, or are other fees charged by the appraiser, for example, an appraisal management fee, also exempt? Well, this is where we're getting some helpful interpretations from the Texas Finance Commission and the Texas Credit Union Commission, which are collectively known as the Joint Commissions for purposes of home equity interpretations. The Joint Commissions have proposed interpretations to this requirement that state the following. Number one, in order for it to be a third-party appraisal, the appraisal must be performed by someone who is not an employee of the lender. So that appears to be the operative test. Is the appraiser an employee of the lender? If not, then it's a valid third-party appraisal. Number two, the fee exemption is limited only to the amount of the appraisal itself. Ancillary fees, such as an appraisal management fee, are subject to the 2% fee limitation and are not exempt. And number three, only an actual appraisal is exempt from the 2% fee limitation. A property evaluation that is not an actual appraisal is not exempt from the 2% fee limitation. The second big ambiguity has to do with title fees. Now, if you'll recall, it says that a state-based premium for a mortgagee title policy with endorsements is exempt from the 2% fee cap. That, of course, begs the question of which endorsements? And is only the title policy itself exempt, or are other title fees also exempt? Now, only the premium for the mortgagee title policy and endorsements, or the title search, if that title search costs less than a mortgagee policy without endorsements, is exempt. Other fees charged by the title company, for example, a settlement fee, a notary fee, etc., are not exempt from the 2% fee calculation. With regard to what endorsements are exempt, the Joint Commissions have proposed interpretations that limit the excludable endorsements to those endorsements that are, quote, applicable to the transaction. Now, what does that mean? What endorsements are applicable to a home equity loan? Well, examples that the Joint Commissions give of applicable endorsements would include the T42, the T42.1, the T19, and other endorsements that would be applicable depending on the loan product and the property type. Examples the Joint Commissions have given of endorsements that would not be applicable are, for example, a manufactured housing endorsement if the property is not a manufactured home, or a revolving line of credit endorsement if the loan is not a HELOC. So, conversely, to look at that, if you're doing a home equity loan and the homestead property is a manufactured home, then a manufactured housing endorsement would be applicable and would be exempt from the 2% fee. If the property were not a manufactured home, then requiring a manufactured housing endorsement would, of course, not be applicable. So it appears, based on the Joint Commission's interpretations, to be more or less a common sense perspective on what endorsements can be excluded from the 2% fee cap. Now, some additional implementation issues that we have identified include the 12-day notice, and this is really an important one because the new 12-day notice for a home equity loan, which is a modified 12-day notice from the current version to account for the constitutional changes, and the new 12-day notice for a rate term refinance of a home equity loan, don't take effect until January 1st, 2018. Now, since the old 12-day notice will not be effective after December 31st, 2017, the old notice cannot be used in connection with a home equity loan that is closed on or after January 1st, 2018. So you cannot take an application in December, provide a 12-day notice in December, close the home equity loan in January without first providing the new form on January 1st, on or after January 1st. Conversely, since the new 12-day notice does not become effective until January 1st, 2018, the new form cannot be used before that date. So you cannot take a home equity application in December, provide the new 12-day notice that will be effective January 1st in December, and then close the loan in January. That will not work. Accordingly, the current 12-day notice will not be effective if given in 2017 for a home equity loan closed in 2018, and the amended new 12-day notice will not be effective if given before January 1st, 2018. Now, the reason that this is the consensus view goes back to the very beginning of home equity lending in 1998. After the voters of the state of Texas approved home equity lending in November 1997, and home equity loan which first took effect in Texas on January 1st, 1998, there were several lenders who inquired of the Texas Attorney General whether they could go ahead and start providing the 12-day notice in December of 1997 and just wait until after January 1st, 1998 to close the loan. And the Attorney General of Texas, in Attorney General Letter DM-452, opined that you cannot do that. And the legal basis for that opinion was simply that the 12-day notice, which was part of the bill that approved home equity lending in Texas, had no legal effect prior to January 1st, 1998. And therefore, if you attempted to provide it prior to that date, it would be as though you had never given it. The same logic applies today, a little bit differently because we have a current 12-day notice. But with regard to the new 12-day notice, you cannot use it prior to January 1st. And with regard to the old 12-day notice, you cannot use it after December 31st. So the bottom line here is that there will be a 12-day window between, at the very least, January 1st and January 12th, 2018, where a home equity loan or a rate term refinance of a home equity loan cannot close. And that is simply because the earliest point in time that you can give the new 12-day notice for either a home equity loan or the new form for a rate term refinance of a home equity loan is January 1st, 2018, and of course you would then need to wait 12 days. Now, another note will be that the very, very last day that a lender should provide the current or the old 12-day notice for a home equity loan is December the 18th, and that assumes the loan will close on December the 31st. Between December the 19th and December the 31st, lenders should not provide a 12-day notice under the current form. And likewise, if a lender does provide a 12-day notice in December under the current form and for whatever reason the loan does not close in January, the lender needs to remember that they must redisclose the 12-day notice on January 1st on the new form and then wait an additional 12 days. Another related question that we've seen a lot is whether or not you can take an application in December for a loan that will close in January, a home equity or a rate term refinance of a home equity. And the question usually goes something along the lines of, can I take the application now, wait until January 1st, provide the new 12-day notice then, and wait 12 days and close the loan at that point? And the answer is, for a 50A6 home equity loan, yes, you can. You can take an application for a home equity loan at any time. But if the loan will close after December the 31st, then you must provide the new 12-day notice on or after January 1st and wait 12 additional days before closing. For a 50F2 rate term refinance of a home equity loan, however, there's a different answer. You cannot take an application in December for a loan that will close in January. And the reason for this is because the 12-day notice for a rate term refinance must be provided within 3 business days of application. That rule does not exist for a home equity 12-day notice. So if you take an application in December for a rate term refinance of a home equity loan, but wait until January to provide the 12-day notice, which you would have to do since the notice has no legal effect prior to January 1st, then your 12-day notice is untimely because you did not provide it within 3 business days, and you will have violated Section 50F2 of the Constitution and created a lien validity issue. Now, as we discussed a little bit earlier, what does it mean to provide the 12-day notice on a rate term refinance within 3 business days after application? Well, based on the proposed interpretations from the Joint Commission, provided essentially means received. So a lender cannot treat the 12-day notice on a rate term like another early disclosure where you take an application and within 3 business days you put together an early disclosure package that includes the LE and whatever else and mail that off to the borrower. Under Section 50F2, that disclosure, the 12-day notice, must be provided, actually received by the borrower within 3 business days, which means you're going to have to think of it more like an ARM disclosure, which under Regulation Z must be provided at the time of application, generally speaking. And so with a 50F2 rate term refinance, do not wait 3 business days and then drop your 12-day notice into the mail. That will result in a lien validity issue and noncompliance with Section 50F2. The borrower needs to receive that 12-day notice either at application or within 3 business days of application. It needs to be in their hands. I hope this webinar has been helpful, and the information provided will help you as you make the transition on January 1st to the new rules affecting home equity lending. I think on the whole these rules are going to be positive for both lenders and homestead owners in Texas. If you have any questions after listening to this, you're free to email me at matt@ppdocs.com. Thank you very much.